Welcome to the podcast, ES Midweek Update, your Wednesday appointment for cyclical and volume analysis on ES, the S&P 500 mini futures contract. I am Ryan Cooper, a financial journalist, and we are joined by expert analyst and trader Clara Bennett from Cyclical. Please note that the views presented in this podcast are generated by AI NotebookLM, that analyses and reprocesses are pre-market live sessions from the YouTube channel Cyclical, and therefore could contain errors. All references to price levels or market analysis are not to be considered financial advice. The aim of this podcast is to analyze market dynamics and provide a midweek update.
All right, everyone, get ready for a deep dive, a special midweek update on the ES.
Oh, exciting.
It is. We've got 3 sessions worth of pre-market data to go through and those S&P 500 mini futures.
You mean the ES?
Yeah, the ES, exactly. They're hinting at some serious action ahead.
Ooh, I like action.
To guide us through all this, we've got Clara Bennett with us.
Hi, everyone.
From Cyclical. She's a real expert when it comes to cyclical analysis. Clara, thanks for joining the deep dive.
Happy to be here. Always a blast to break down what the ES is doing, especially when it looks like things could get wild.
Wild is right. Okay, so you know cycles are your thing.
Oh, yeah.
So let's paint a clear picture for our listeners. Where are things standing right now? We're going to zoom all the way out.
Big picture.
Yeah, the big picture, the quarterly cycle, and then work our way down.
All the way to the 4-day.
To the 4-day, you got it. We'll be hitting key levels, volume patterns, even take a peek at the depth of market.
And don't forget those economic news releases coming up.
Oh, right. PMI data later today, and of course the non-farm payrolls report on Friday. Always a big one.
Those releases could really add fuel to the fire, so knowing where the ES is sitting cyclically is super important.
Absolutely crucial for anyone looking to, ride these waves.
Ride those waves, exactly.
Okay, so let's start big picture, 10,000-foot view. Where are we in the grand scheme of the ES cycle, specifically the monthly and the 16-day cycles?
Okay, well, the ES is painting an interesting picture right now. When we look at the monthly and the 16-day, there's a good chance we're seeing a bullish signal forming.
Bullish?
Yeah, on the monthly chart. But we also have this recent bearish break.
Oh, interesting.
In the 8-day cycle, which kind of throws a wrench in things.
So bullish on the monthly, but a bearish break on the 8-day. It sounds like we're at a crossroads here. What could be causing this kind of push and pull in the market?
Well, think of it this way. The market wants to go up, right?
Yeah.
And the longer-term cycles are showing that. You can see it in the recent rally. But there's still this underlying uncertainty.
Right, I get that.
About things like inflation, interest rates, maybe even some of those geopolitical events.
Always something.
Yeah, and this uncertainty shows up in the shorter-term cycles, hence the sudden dips and pullbacks we've seen. So until one side takes over, we're probably going to keep seeing this back and forth. Like
a tug of war.
Exactly. A market tug of war.
The bulls see the long-term potential, and the bears are laser focused on the risks.
That's a great way to put it.
Okay, well, let's zoom in a little further now.
Yeah.
You mentioned the 4-day cycle earlier. What's going on there? And why is it so important to be paying attention to it right now?
The 4-day cycle is always important.
It's always on the radar.
But right now, it's extra crucial because it's in its final stages.
Ooh, getting close.
Yeah, and historically, these final stages are when we see the most decisive, the powerful moves.
So it's decision time.
Think of it like a runner in a sprint nearing the finish line.
Got to give their all.
Exactly. There's that burst of energy, in a clear direction.
So the 4-day cycle is coming up on the finish line. We just don't know if it'll be a graceful finish or a stumble. Now, I've got to ask about this 2-day cycle you mentioned.
Wow.
It's a cycle within a cycle.
A cycle within a cycle.
My brain's hurting a little bit.
It's a little trippy.
Can you break that down for our listeners, and why should they even care about this 2-day cycle?
Absolutely. Imagine the 4-day cycle is the main trend, the overall direction the market wants to head in.
Okay, got it.
The 2-day cycle is like the pulse within that trend, the little swings, the mini rallies and pullbacks that happen inside that bigger 4-day move.
Right, the little wiggles along the way.
By understanding the 2-day, we can get a feel for whether that 4-day cycle is getting stronger or maybe losing steam.
So it's like, okay, the 4-day is the ship and the 2-day is like the rudder.
A very responsive rudder.
Guiding the ship's course. What's the 2-day telling us about the 4-day cycle right now?
Yeah.
Are they on the same page? Or is there like some tension.
Well, this is where things get really interesting. Despite that bearish break we talked about on the 8-day and that recent gap down we saw in the ES, the price action during the American trading session, it hasn't been super bearish. In fact, we've seen some strong buying,
Oh, really?
especially around certain
But
levels.
even with those bearish signals, the American session is showing some signs of life, maybe even some bullish hints.
To be?
Definitely something to keep an eye on. But of course, we can't talk price action without talking about volume.
The heart of it all.
The fuel, the driver.
Hmm.
What has the volume profile been telling us about the market's true intentions, particularly in these last 3 pre-market sessions?
You're right. Volume is key. It's like the market's heartbeat.
Yeah,
We need to check that pulse.
make sure it's strong.
See how strong the conviction is. Right. And what we've seen lately, it's pretty remarkable. Specific 30-minute windows.
Short bursts.
Yeah, bursts, especially pre-market where we've seen massive spikes in volume.
Like how massive?
Hundreds of thousands of contracts changing hands in just that half hour.
Whoa, hundreds of thousands in 30 minutes? That's a serious amount of activity. What does that tell you about the mood? Are people piling in or are they running for the exits?
It's a little of both, honestly.
Oh, interesting.
High volume can mean strong conviction, both for the buyers and the sellers.
Makes sense.
Here, it tells me there's a lot of uncertainty, indecision. Traders are trying to figure out which way this thing is going to break, you know?
Will the bulls win out or will the bears take control?
Exactly. And this high volume, especially around key levels, well, it tells me a big move is coming. The question is, which direction?
Okay, high volume, high uncertainty, potential breakout brewing. Things are heating up for traders.
It's getting exciting.
Before we get into all that, Clara, can you give us some specific levels to watch in the ES today? You know, the nitty-gritty, the actionable stuff our listeners can use.
Of course. Based on the pre-market data and factoring in our cyclical analysis, there are a few key levels that are really standing out. For support, keep an eye on the 60-10 to 60-12 zone.
60-10 to 60-12, right?
If that breaks, the next major support sits around 5,970.
Got it.
On the upside, resistance comes in around 60.45 to 60.50,
Okay.
and then again at 60.65 to 60.68.
All right, so we've got our battle lines, support at 60-10 to 60-12 and 5,970, resistance at 60.45 to 60.50, and 60.65 to 60.68. Now, with all this talk about breakouts and big moves, I have to ask, could the market be setting us up for one of those, dreaded V reversals, that sudden upward jolt?
Oh, the dreaded V.
Yeah, catches traders off guard every time.
It's definitely a possibility, and something we need to be aware of. The recent gap down and then that price recovery we've seen, they do resemble some past V reversal pattern.
Right.
What makes it tricky is that V reversals often happen on high volume, which, like we've been saying, is exactly what we're seeing right now.
So mixed signals, high volume, potential for a V reversal. Sounds like we need to be very careful here. But before we go too deep into those potential traps, let's shift gears a bit and talk about another tool you mentioned, the depth of market, or DOM.
Ah, yes, the DOM.
I think a lot of traders might not be familiar with it, so can you explain what it is and how it helps us understand what's happening beneath the surface of the ES?
Think of the DOM like X-ray vision for the market.
Ooh, I like that.
It shows us the supply and demand at different price levels, gives us a peek into the order book, see what the big players are thinking.
So if the price action and volume are like the symptoms, the DOM is helping us diagnose the underlying cause.
Exactly. It helps us understand what's driving those market movements.
Very cool. What's the DOM been revealing about the ES in these pre-market sessions? Is it backing up those potential breakouts or telling a different story?
It's giving us some interesting clues, that's for sure. For instance, around those key support and resistance levels we mentioned, we've seen big clusters of buy and sell orders.
Oh, so they're getting ready.
Yeah, it really reinforces the idea that these levels are major battleground.
Like a standoff.
And a break in either direction could trigger a cascade of orders, leading to a sharp, sustained move.
The calm before the storm.
You could say that.
Okay, so the DOM is showing a market ready for action. Big players are positioning themselves around those key levels. But, Clara, we can't forget about those economic releases coming out. How might the PMI data and the non-farm payrolls report impact this already volatile situation?
Well, both the PMI and the non-farm payrolls are known to really move the market. They give us valuable insight into the health of the economy, which then influences what the Fed does with interest rates and monetary policy.
So everyone will be watching.
You better believe it. Traders will be glued to their screens, breaking down every single detail, looking for clues.
Trying to predict the future.
Basically, they want to know what direction is the economy headed, And how will that impact the ES?
So we're adding another layer of uncertainty and potential volatility
It's a lot to digest.
to an already complex situation.
Buckle up. It's going to be a wild ride. Yeah, these economic releases, they're like wild cards, you know?
They can really shake things up.
Especially with where the ES is cyclically right now.
You've painted quite a picture here, Clara. Clashing cyclical signals, high volume, those economic releases about to drop. It's enough to make anyone nervous, even the pros.
A little bit of excitement never hurts.
True, true. But let's talk strategy, how to navigate this.
Yeah.
You mentioned the 4-day cycle is ending soon. Does the timing of these releases make things more complicated, or could it actually be a good thing?
It's a bit of both. The timing definitely adds another layer. Imagine a pressure cooker ready to blow, and then someone throws more fuel on the fire.
Oh, that's not good.
That's kind of what these releases are doing to the ES right now.
So much pressure.
But that pressure, it can create explosive moves.
Yeah.
And that's where the opportunity comes in. If you can kind of anticipate how the market will react to the news.
Read the tea leaves.
Exactly. And align that with the cyclical forces, well, you could ride some serious waves.
High risk, high reward.
That's the market for you.
So you've been doing this for a while, Clara. What's your approach to trading in this kind of uncertain, volatile environment? How do you stay cautious but still capitalize on those opportunities?
For me, it always comes back to the plan.
Having a plan.
Having a well-defined trading plan and sticking to it, no matter what happens. So that means figuring out clear entry and exit points, using my technical analysis, setting profit targets that are realistic, and, of course, managing risk.
Always managing risk.
In a market like this, emotions run high, fear can kick in.
Oh, yeah.
Discipline is key. It's your best friend.
Stick to the plan, manage the risk, stay calm. Solid advice. But let's get specific. How would you approach trading the ES this week, given everything we've talked about?
Okay, let's say we get some good news from the PMI data later today.
Positive surprise.
And the ES breaks above that 65 to 68 resistance zone, holds above it, and we see strong buying volume. That's a good sign, a bullish breakout confirmation.
Confirmation's key.
I might consider going long, but with a tight stop loss just below that breakout level.
Just in case.
Just in case it reverses.
Smart. So you're not just jumping in, you're waiting for that confirmation and protecting yourself. What if the PMI data is a disappointment and the market reacts badly?
Then I'm watching that 60-10 to 60-12 support level like a hawk.
Like a hawk.
If it breaks below that decisively with heavy selling volume, that could mean a bearish continuation.
Oh.
But I wouldn't rush to short it just yet. Remember, we've got that potential V reversal trap. I want to see the ES break and hold below that next major support at 59.70, then I'd consider a short position.
So patience is key, even when things look bearish.
Patience is always key.
You're not chasing the move, waiting for confirmation, and always managing risk. Now, you mentioned this double way indicator earlier. Can you tell us more about that and how it fits into your strategy, especially with breakouts and breakdowns?
Sure. The double way indicator, it combines cyclical analysis with price action, so it gives you another perspective on where the market might be headed.
Like a different angle.
It's really helpful for confirming or maybe challenging signals from other indicators. For example, let's say the double way is also pointing to a bullish breakout, alongside a break above that 65 to 68 resistance level. That would give me more confidence.
Double the confirmation.
Exactly. But if the double way is showing something different, maybe even conflicting signals, I might hold off or adjust my position size because there's more uncertainty.
So it's like getting a second opinion.
Precisely.
It's all about gathering as much information as possible.
Multiple perspectives.
Analyzing it from all angles.
Exactly.
And then making a smart decision based on your plan and risk tolerance.
That's what it's all about. Trading is a journey, you know. It's learning, adapting, refining your approach. There's no magic formula.
No guarantees.
You have to constantly be searching for an edge, managing risk, and being mentally prepared.
For whatever the market throws at you. Well said, Clara. You've given our listeners a masterclass on navigating uncertain markets. But before we wrap up, let's circle back to those news releases. You mentioned that traders will be looking for hints about the economy and the impact on the ES. But beyond the immediate reaction, how do you see these releases playing out in the bigger picture? The Fed's fight against inflation, all of that.
That's the big question, isn't it?
The million-dollar question.
The market right now, It's thinking we'll have a soft landing.
That the Fed can bring inflation down without causing a recession.
Right, but there's a lot of debate about whether that's even possible.
It's a tough situation.
The PMI data and the non-farm payrolls report, they'll give us more clues about how strong the economy really is and the chances of a recession.
So it's not just about the immediate market reaction, but how it fits into the larger economic puzzle.
Exactly.
A strong jobs report, for example, could actually be bad news, right? It could fuel inflation fears and make the Fed raise rates even more, which could hurt the market.
That's one possibility.
On the other hand, weak economic data could make people worry about a recession,
Flight to safety.
which could actually boost the ES.
It's a lot of moving parts.
It's a complex system.
These news releases are just pieces of the puzzle.
Well, Clara, you've given our listeners so much to think about, from cyclical analysis to the impact of economic news.
Yeah.
Before we let you go, I have one last question. We've talked about the technical stuff, the levels, the cycles, but what about the mental game? How do you deal with the emotional roller coaster of trading, especially when there's a lot at stake?
That's such an important part of trading, and I think it's often overlooked. Managing your emotions is just as crucial as managing your risk.
It's all connected.
Fear and greed, they can mess with your judgment.
Make you do things you'll regret.
Exactly. For me, it comes down to having that clear trading plan,
There it is again.
sticking to it, and accepting that sometimes you'll lose. You can't win every trade.
If only we could.
Dwelling on past mistakes won't help. It's about learning from them and moving on with a clear mind.
Focus on the process, not just the outcome.
And don't let your emotions make your decisions for you.
Wise words, Clara. It's been great having you on, Clara. You've shared so much with our listeners today. I'm sure they're feeling much more prepared to tackle the ES this week, even with all the uncertainty out there.
It was my pleasure. Always happy to dig into the markets. Hopefully we've given everyone some things to think about.
Definitely. So let's do a quick recap for everyone before we wrap up. We started by looking at the big picture, the monthly and 16-day cycles, which are kind of hinting at a bullish signal, right?
Right.
But we also have that bearish break on the 8-day cycle, so it's a bit of a tug of war between those longer-term and shorter-term trends.
Exactly. A real push and pull.
And then we zoomed in on the 4-day cycle, which is wrapping up and ready for a potentially big move.
Decision time is coming.
We talked about the 2-day cycle acting as a pulse within that larger trend.
Like a little heartbeat within the bigger cycle.
Yeah, exactly. And then we got into the volume profile, which has been wild in these pre-market sessions. Those massive spikes in volume showing strong conviction from both sides.
Buyers and sellers battling it out.
And of course, the depth of market, the DOM, which gives us a glimpse into those big orders hiding below the surface, especially around those key levels you talked about.
Those levels are going to be key this week.
A break above 60.65 to 60.68 could mean a bullish breakout, while a break below 60.10 to 60.12 could open the door for a bearish continuation. And on top of all that, we have those PMI data and non-farm payrolls reports adding even more fuel to the fire.
It's going to be an interesting week, that's for sure.
Definitely a wild ride ahead.
Yeah.
But you've given our listeners the tools and knowledge they need. You talked about having a solid trading plan, sticking to it, managing risk, and keeping those emotions in check. Oh, and don't forget the double weigh indicator.
Ah, yes, my trusty tool.
Your secret weapon for confirming those trading signals.
Helps to double check things, make sure you're seeing the whole picture.
Exactly. Well, Clara, thanks again for joining us on the Deep Dive. It's been fantastic.
Thanks for having me. Happy trading, everyone.
And to all our listeners out there, remember, knowledge is power in the markets. Keep learning, keep exploring, and never stop seeking that edge. We'll be back soon with more deep dives into the world of finance and trading. Until then, happy trading, and may your trades be profitable.
Thank you for listening to the podcast ES Midweek Update. Subscribe to the Cycle Depth channel to stay tuned for the next episodes and leave a comment. We remind you that the opinions expressed in this podcast are generated autonomously by AI NotebookLM, based on our pre-market live sessions of the U.S. market, and therefore, the content might not fully reflect objective market data or the analyses from our live sessions. This podcast is not financial advice. A greeting from your host, Ryan Cooper, and we'll see you next Wednesday.